I'm going to cover basically three things. Talk a little bit about the financial crisis, but very briefly, and the faith communities in that. Spend a little bit of time talking about what faith communities have been doing on the investment side. That's the ICCR 3IG story. And finally, maybe some of the challenges going into the future, some of the new things that are out there that we're trying to do, either in reshaping the global financial system, which is on everybody's agenda these days, but quickly falling off many people's agendas, but also on the more positive social impact investing. What are the new things that religions are doing to not necessarily avoid evil and sinful products or companies, but more proactively engage in different development projects. So on the financial crisis, maybe just a few things. I think there are a number of defining features about the current financial crisis, and I think we've all been plowing our way through many different descriptions of that and probably come up with some of our own. There are three features of it that I would like to point out. First, I think, is its scope, which is that it's been global in nature, which distinguishes it. The second is the scale, the fact that trillions of dollars of capital, by some estimates, some $15 trillion of capital has been destroyed in this crisis. And third, that it involves in Genesis, the crisis started at the center and not at the periphery. Right? This crisis did not start in Thailand with a bat crisis or in Russia with a currency crisis or an overextension of the usual characters out there. This started at the core in the financial capital by many standards of the world, Wall Street in New York. And finally, it's important, I think, to note in this conversation that the crisis has extended throughout the financial system. It hasn't been contained. It's been somewhat like a virus, somewhat like the swine flu that we're trying to deal with, right? And it's probably engaged a real conversation on the nature of the state's response, the role of the state in terms of whether it's doing Band-Aid work in terms of relief in the midst of crisis or triage, or actually stimulus to get some things going again, or now figuring out what regulation responsibilities are there. Investors across the spectrum have felt the impact of the crisis, and millions are being forced to reconsider their retirement plans, their home ownership plans, their employment security, and the adequacy of their savings to support themselves, their families, and educate their children. In his article 2 Sundays ago in the Times Magazine, Paul Krugman set out the macroeconomic conversation between saltwater economics and freshwater economists, And he said, US households have seen $13 trillion in wealth evaporate. More than 6 million jobs have been lost, and the unemployment rate appears headed to its highest level since 1940, going somewhere close to 10% and probably staying there for a while. Governments have committed across the world up to $5 trillion in either relief packages or stimulus efforts. The collapse of the credit market, which was, in my estimation, caused by the wholesale failure of policies designed to manage risk in these markets, has stirred many to examine their participation in the financial and equity markets and their fundamental investment approaches, policies, principles, and strategies. This, I would argue, is a very good thing, and something many in the faith community have been crying for, albeit in something of a wilderness. This review of structures obviously includes an analysis of what happened. We've had plenty of that. Some assignment of responsibility. We've had some of that. An attempt to recapture what has been lost through negligence or liability. Take the Madoff case. And a consideration of what to do going forward to avoid such crisis in the future. This includes for some an examination and analysis of the systemic risk that has been exposed and reaches beyond individual institutions and governments. So this is the big question that still remains out there. Not the individual risk of a Citibank or a Bank of America or a Morgan Stanley, but the systemic risk that goes beyond any of them and refers to the virus kind of situation that I mentioned earlier. It invites a consideration of how such systemic risk can be mitigated, contained, or prevented in the future, and includes a consideration of the role of the state and its agencies for the guarantee of the system. Faith traditions, their institutions, and their followers have not been immune to the impacts of this crisis. And this experience has and should continue to surface a close examination of their principles, policies, practices, which have been informed by their tradition. As participants in the financial system and in the capital markets and in the economy, the faiths have always been challenged to reconcile the ethics of business and the ethics of the marketplace with the ethics and morals that flow from their respective traditions. And this has not been easy, if you have ever looked into this. The issues immediately may come to mind: profit-taking, interest, usury, debt repayment, gambling, speculation, and risk. These come immediately in mind and have been the subject for theological reflection for many centuries. Newer concerns have arisen around the nature, for instance, of fundraising for both operations and projects and development programs and strategies. For example, how do we reconcile the funding that institutions like Georgetown and others may do in terms of who they accept funds from, how the money was raised, and then what kind of leverage is handed over in that raising? The famous case of the University of Portland with Phil Knight from Nike, when some of the students started to create some unrest in terms of the promotion that the Nike products were getting on campus, comes to mind. It's important in this period of reflection to look at the fabric of our communities, I think, in a different way. For instance, the extensive network of faith-based entities that are maintained throughout the world is at once a snapshot of our active presence in service and ministry, to use a phrase from my own tradition. But it is at the same time a snapshot of financial activity within society. The extent and the diversity of religious faith traditions' operations around the world is immense, depending on their organizational structure and the reach of their operations. They have important implications for us in terms of the financial system. The establishment and maintenance of all these services and the centers of operation demand an extensive operational and financial administration that includes income generation and fundraising by all religious traditions. Furthermore, in addition to civil requirements, many traditions offer clear teaching on the moral acceptability of different types of activities that are permitted in this arena. If we look very quickly, for instance, it was the 17th century that introduced two very key issues and that spread rapidly across Europe and in some senses have placed us where we are today in terms of the financial system. And that was the belief and the idea that reasonable interest on a monetary loan does not amount to usury, something that made the banking system possible. And secondly, that the corporation was invented as a separate person, a limited liability corporation, which protects shareholders from liability or debt repayment. Those are two pivotal pieces that reach back into the 17th century. Recognizing that before that, we consider the practice of usury, which is prohibited in the three Abrahamic faiths. It was prohibited for hundreds of years before that. And that's and somehow or other they were able in that time period to move. Hispanus, for instance, in Rome in the early 13th century, made the initial agreement that said maybe it was possible to collect a penalty fee if somebody didn't pay back their loan on time. Not interest, but a penalty because of the loan. Henry VIII was one of the first people to introduce the acceptance of maybe 10% of interest was an okay thing. But we know since then that things have moved very quickly, as faith traditions have also accommodated themselves to the development of the modern financial system and the banking system. When we consider that the practice of usury was limited in all of those ways, and how the practice evolved through a journey of legal semantics and ethical reasoning, biblical commands continue to challenge us. When we look at the book of Deuteronomy and its teaching, for instance, about the Jubilee and the Sabbath year, when we look at the Gospel of John or Matthew, when we talk about Jesus in the temple, when we look at the Gospel of Luke, where he reminds us that you should lend without expecting a return. So faith-consistent investing, how have they actually entered into this world, and how have they managed to negotiate or navigate this terrain, either in their investment principles or in their fundraising, and we're going to focus more specifically on the investment side. The fallout from the current financial crisis affords them another opportunity, I think, to review the practices that are there. But let's first of all take a look at what is there. Most have been informed by their traditions in a way that has generated investment principles and policies that I would argue are pretty conservative, but have been, basically followed. There's exclusions about alcohol, about gambling, about pornography, about companies that provide abortion services or birth control, lots of different selections out there. Many have focused primarily on securing the resources needed to support their respective missions, but also fulfilling their fiduciary responsibility. Because many of these investment tools that the faiths follow are organized according to the legal and civil requirements within a society, which do have some fiduciary legal responsibilities therein, depending on the fund. Many have worked to integrate and infuse an infusion of their beliefs into these principles, and activities that continue to reflect that infusion and that integration. There are two types of screening that have been followed. Negative screening, which I just referred to, which would be the avoidance of sin and evil and staying away from any number of companies, and I gave you a small example of those, but one could also talk about human rights, one could also talk about nuclear weapons, one could also talk about landmines, one could also talk about facilitation of trafficking in human beings. Lots of people have screens about a long list of those. And positive screening, which is becoming more and more a desirable approach. And positive screening is looking at saying, what are those areas within the Fortune 500 or the Russell 1000 or a particular index that would actually contribute positively, right, to the building up of sustainable communities, right? Green energy, alternative energy, mass transportation come to mind. Alternative investing, and this is the last example I want to give, which was also pioneered by the religious communities, maybe has a slightly different understanding within that tradition than alternative investing in the financial world, was investments that many religious communities took, recognizing that they might have been taking a greater risk, right? Recognizing that they were not going to get a market rate of return, right? But because they wanted to support or enable a particular project or activity. Probably the best example of that is the amount of root capital that the faith traditions put into microfinance. Right? But many also put money into affordable housing schemes. Women's World Banking is an example that was started by religious communities working with others, and then has now, continued to provide financing and capital and credit for women around the world. These are all good developments. But now what I want to turn is maybe for a moment to specifically addressing the financial services sector, which is a sector that's near and dear to my heart, and which is obviously at the heart of the present financial crisis. Faith traditions have a unique global reach with significant potential impact. It is a reach that match the span and penetration of transnational corporations. Many are aware that the recent period of global integration has been roundly criticized for the benefits that it has brought to multinational and global corporations at the expense of workers, local communities, the environment, and the power of individual states to fulfill their role of governance. In many ways, it's been described by some in the faith tradition as a process that has a logic but no ethic in terms of its extension. The financial services sector, in particular within that globalization process, has been in the forefront of this process and has reaped enormous profits. Major banks, insurance companies, and credit card companies have created an enormous integrated global footprint that allows them to provide a variety of services to clients in both the public and private sector and to participate in capital markets across the world. I've sat in meetings with major banks in New York who will tell us that they're sending credit card applications out to 25 million people in South Asia. So we'd be asking, what's the expected, what's the rationale of the business plan behind that? Oh, we're clearly recognizing that out of that we might be getting 1 million customers, or maybe 500,000 that will actually be satisfactory. But the business model is to use their reach, which is in 100, 120 countries around the world, and penetrate that market with different services, and by providing the things that we all have benefited greatly from, whether it's an ATM machine, the ability to transfer money, all of those things have been made possible by this marriage of the major financial businesses, the technology developments, and their huge capital reserve. Faith-consistent investors have engaged this sector, at least in my estimation, on 3 different levels over the years. One as citizens and members of civil society and their respective countries. One as clients and shareholders of these corporations. And thirdly, in their own institutions and the initiatives and projects that they undertake. I want to spend a few moments first on the citizens question, because I think this is key in the present debate. The foundation for the operation of the financial system as we know it today is trust. And trust is built and sustained by a framework and a process that involves a number of different actors and judgments. If you are following the press in the last 10 days, a number of senior bankers from most of the major banks in the world got together, I believe, in Frankfurt last week to discuss how they are going to restore trust and confidence in their ways of doing things. In the collapse, the foundational trust and the list of issues and concerns that are being raised is quite extensive. But for me, a top priority has to be the responsibility of states to make sure that its citizens are well served by the financial system and the economy is well organized, and that there is a meaningful regulatory framework. So at the core of this debate is, what's the role and the responsibility of the state, okay, in terms of making sure that citizens are well served by the financial system that's in place and by the economy and its operations. This, of course, necessarily includes the different agencies that are out there, and I think has produced a fairly lively debate about the extent of government regulation, whether it's needed to be government light or government heavy, right? Whether it's intrusive or less intrusive. Whether indeed we should leave this up to the financial sector to come forward with a set of voluntary principles and not legislate or regulate at all. In the Catholic tradition, there is, for instance, a considered body of teaching about the role of the state to promote the common good. One of its key texts in the church is on the Church's role in the world states that the complex circumstances of our day make it necessary for public authority to intervene more often in social, economic, and cultural matters in order to bring about favorable conditions which will give more effective help to citizens and groups in their free pursuit of man's initial well-being. That comes from the Church in the Modern World in the Second Vatican Council. but there are numerous other citations that one could look at from Pope John the 23rd and Pope John Paul II. Let me skip over some of those and say that the current Pope Benedict, who has certainly taken part in this great debate as a young professor in the 1960s in terms of the change and upheaval in the post-conciliar period, he addresses currently the crisis in his recent encyclical Caritas in Veritate. And that much delayed document was because of the internal debate about what exactly that means. And he recognizes very clearly there that it's now beyond the scope of many states. This is talking about the role of the states. It's gone beyond the role of individual states to regulate the financial system or their local economies. And so this seems to be at least a place where there is need for much greater collaboration between nation states. So we've begun at least to see some of that happening in the political world, where we've gone from the G8 to now the G20. But then many would also argue that it should be at the United Nations, where all countries are represented. That this role of regulating and providing a financial regulatory framework that ensures the financial system and the economy serves people and a sustainable future, rather than leaving it to this regulatory arbitrage, which is now the case. If you don't like the deal you're getting in the US, go to the UK. If you don't like the deal you're getting in the UK, go to Hong Kong. Right? So that's kind of the question that the Pope addresses in a couple of places in the recent encyclical. Today, and I'll just use one quote, today as we take to heart the lessons of the current economic crisis, which sees the state's public authority directly involved in correcting errors and malfunctions, it seems more realistic to reevaluate their role and their powers, which need to be prudently reviewed and remodeled, so as to enable them perhaps through new forms of engagement to address the challenges of today's world. That's in number 24 of the encyclical. As clients and shareholders, faith-consistent investors have engaged major banks, and I began this journey in a very small way with my community as far back as the Latin American debt crisis, which was in the mid to late 70s. For those of you who are old enough in the room to recognize what was going on at that time, many major banks were awash with petrodollars. This was the time of the first oil crisis, if you remember. Now flush with petrodollars, they have to figure out what to do with them. In many instances, they just pushed them out the door as quickly as possible, abandoning in many instances their own lending criteria and their own practice and their own policies. Hence, they ended up, for instance, the lending criteria, they ended up lending money to military dictators. They ended up lending money to juntas that were using the money to purchase military arms to oppress their own people internally. They were lending money for environmental projects and dams that in many instances were never built or never completed. There are numerous examples of this engagement. Since then, the faith communities have been in a series of engagements with many of these major banks, and we can document all of these at the Interfaith Center on Corporate Responsibility in New York, around the following issues: the dangers of facilitation of capital flight, the use and promotion of tax havens, the use of capital controls by sovereign governments, financing projects harmful to the environment and violating the rights of indigenous and local communities, discrimination against poor and minorities in lending and insurance services. You look at the practices of groups like Household Financial, which is now owned by HSBC, and some of the penalties that have been paid in the United States over the years for non-compliance with the Community Reinvestment Act. Faith communities were in the forefront of addressing many of those abuses, either by asking banks to examine their CRA, Community Reinvestment Act compliance, or filing resolutions to that effect. Working, for instance, with Citigroup, we were able to challenge them to reduce the amount of fees that they charge for immigrants to repatriate their funds to support their families at home. In other words, remittances going back to Haiti, Honduras, Guatemala, different countries in Africa. What are the fees that are attached to sending $200 or $300 at the end of every month? In their own practices and projects, faith traditions at various levels have been historically active in the creation and promotion of institutions that support local economies and community development. Community development loan funds, for instance, credit unions, cooperatives, microfinance I already talked about, affordable housing, small business, and social entrepreneurship. This, in many instances, was started and supported through below market rate investments, where risk was deemed too great or the loan processing too labor intensive for the conventional lenders. So faith communities were in the forefront of putting many of the funds out there that enabled microfinance to start. Now you see the Citigroups and the Deutsche Banks of the world and the HSBCs of the world wanting to enter that market. They're needed in that market, I'm not denying that, but the way in which they enter that market and the ethical values that they bring to it and the principles will deserve great scrutiny. More recently, however, and these were my last points, faith traditions have joined with other socially responsible investors to create funds that are market rate, but with positive social impact mission. These can be either focused on a specific priority or a geographic region, and are introduced to contribute to development strategy in a particular region or area. For example, the Global Solidarity Forest Fund was an initiative of a diocese in Sweden, okay, that wanted to introduce sustainable forestry in Mozambique. They put the fund together, went out there, marketed the fund to other faith traditions and to the SRI community, got some pension funds together. It's been up and operating. And obviously, for any of you who know anything about forestry, one ought not to be looking for a quick return tomorrow, right? It takes a little time for those trees to grow and then to replant and to work with local communities. What a real example. There are other examples where some faith traditions have taken up this effort within their own faith groups, but also on an interfaith basis. And particularly looking at other SRI investors who want to collaborate in this effort. Other areas of focus for these efforts include green technology, community development I spoke about, sustainable real assets, sustainable consumer products. More recently, some have discussed the creation of an interfaith stock exchange. Of course, that discounts the fact that all exchanges contain an element of good faith. The interfaith stock exchange would be a virtual but non-operating stock exchange that enables faith institutions to invest in stocks that comply with their values. This is in the process of being developed by some groups that will also be, first of all, available to institutional investors within the faith traditions, but then also might eventually be rolled out to the individual investor at home who might, if they want to be into trading on their computer or online, able to look at this index and actually choose where they want to make investments or decisions about their 401ks or the like. In conclusion, in the public sector debate, in the legislative process, and in the exercise of active ownership of assets invested in the capital markets, faith-consistent investors have been and will continue to raise the following issues about the activities and the practices of banks and the financial sector in particular. The sustainability of the practices and the activities that are being financed, number one. The leveraged nature of the company and the risk-taking with other people's money. Policies that are in place about human rights and the environment. Transparency to shareholders and to regulators, and to the little people who are wanting to find out what the impact of an insurance company or a bank or a credit card company may have in their community. Honesty and compliance with the legal requirements in business lines that are verified. Inclusiveness of those employed and those serviced by these institutions goes back to the Community Reinvestment Act. Compensation structure for top executives. And if you've followed this discussion in any way over the last few months, you recognize how absolutely corrupted it is. Not only can the industry not agree on what a compensation structure might be, right, governments can't agree. The G20 finance ministers could not agree on this issue 10 days ago in London. Right? The Germans and the French were one place, the Brits and ourselves in another place. But then we read in the papers that top 500 executives at major banks expect to be collecting on bonuses something in excess of $700,000 each, okay, in 2008. Reshaping the global finance system, which involves not only conversations with banks, but with public officials, is to look at a system that seeks to put people, especially the poor in developing countries, and the environment first. To look at a more robust global regulatory reform that clearly establishes sustainability as a top priority, and therefore includes all of the metrics to measure sustainability in any business or lending practice that's out there. That eliminates speculation on the commodities market, especially commodities that are essential for life. If you look at the speculation that went on last year on things like food and energy and drove the prices off the rails, then there needs to be some way to control speculation on those commodities. And suppress the culture of tax havens, and I'm happy to say that this is one that is moving rapidly. I think Gordon Brown said the other day, the era of tax havens is over. These have now existed for how many hundreds of years? Switzerland was taken to court over it. And now there are any number of these around, which are basically there, we know, to help people to avoid paying taxes to their local governments or to their national governments. And those are things that governments depend on to meet the budget. So both individuals and corporations have been enabled by this process. So we've got a few pieces of legislation on the Hill. We're asking companies to come forward with a commitment to not use tax havens for the specific purpose of avoiding paying legal tax bills to their governments around the world. Faith traditions have been pioneers in relief and development. The moment is also asking for a more comprehensive view of social justice aimed at true development. The motivation for this vision comes from our belief in what is greater than the individual or the whole. It is, as Pope Benedict recently said, an openness towards the transcendent that compels us to integrate such principles into an ever-expanding network of relationship that far too long has been focused on the logic of economic integration. The tradition of the faiths to bring an ethic to this system of integration is long overdue. But in the faiths themselves are now beginning to look clearly at their development and relief projects, and how are those integrated with how they themselves are using their investment assets? Are they complementing one another? Are they actually contradicting one another? So there is a real challenge here about how one integrates the investment approach in terms of capital markets or corporations or funds, and the development projects that we also are so sternly committed to in different parts of the world. They need to be harmonized, integrated, so that they're all going in the same direction. There are examples where the faiths have done this. The integration of the way that the assets are invested into the mission with their relief and development work is well underway. Through a partnership with other like-minded investors and by their investing members, to see these opportunities and tools to reshape the financial system and to actively provide opportunities to the poor across the world, the faith traditions, I believe, can make a very important contribution to a reshaped financial system and the alleviation of the suffering that poverty causes. Thank you much. Sorry, Catherine, I went on a few minutes longer, I think.
Thank you. That was a wonderful and very thought-provoking piece. I have two questions. Let me start off the questions, which are very different. The first one, in the early days of putting together the 3IG, there were some surveys which were designed basically to say to people, this is really important. And there were some numbers that were thrown around. I remember somewhere between maybe 10–12% of the world's liquid capital assets that are held by faith institutions, and somewhere between some enormous number of the land that's held by faith institutions, 20–25%. this was a long time ago, so I wondered if there was any update or if there's any clarity. I think it's not terribly important, except to try to make the point that this is not trivial. It's huge, but I wondered if we have any better fix. The second question, one thing that I haven't, yours is a very sober, very professional approach. I've just come back from a meeting where there was much more language about greed and idolatry and the god of the market and so on, which one tends to associate with this discussion about faith and investment. But most surprising was the speech at this Sant'Egidio meeting where I was last week by Michel Camdessus, who very much focused on this question of the culture of greed, and essentially almost, he said, you know, how could I have lived through it and not have seen this, not have been aware that the world was being driven basically towards this precipice. So I just wondered how you deal with the greed factor and some of the tensions that come with the fact that economic growth is fueled by consumption, but that there is this sense of the world having gone amok.
Sure. A couple of comments. We are still, and you're correct about the assessments that were out there in terms of the assets of the faith communities, basically divided into liquid assets, which would be funds and capital and investments, and fixed assets, which would mostly be properties, for those of you who are not versed in that language. There's at least a continuing effort to catalog what all of that amounts to. And we haven't made a lot of progress in terms of, we have more data, whether or not or how complete it is. It's always a question. I always remember my early years of working up in Massachusetts, and we were trying to look for some funds to put into some affordable housing, and we were scouting around looking at the different parishes and judicatories and dioceses and institutions that we might convince to take this venture. And somebody one day said to me, "Father, I bet you haven't talked to the cemetery fund." I said, "Wow." He said, "It never dawned on me to talk to the cemetery fund." Well, he said, you know, they're in the business of offering perpetuity in terms of some of those plots they have out there. So I don't know how they're guaranteeing that without having a nest egg somewhere. So I think that's just a small example, I think, of cataloging the resources of the faiths. That it is a very retail engagement. One can't immediately assume that it's at the center the funds are held. That it could be in the cemetery fund for the Diocese of Brooklyn. That it could be at the synagogue in Beverly Hills. Or that it might indeed be at the temple in the middle of Bangalore. Right? So that's one of the pieces, I think, that we continue to wrestle with. We became keenly aware after the collapse of the Soviet Union that, for instance, most of the faith traditions in that part of the world, their assets are mostly in real estate. It's much of it very run down and not very well kept up, but they've got a specific issue to try and actually turn that into a resource or an asset that they can actually use for some other projects. So we're still working with trying to at least catalog where that is, but it is significant, no question about it. No, it's just a matter of trying to figure out where it's held, what its size is, and how then would you also, I think, connect the endowment of institutions like Georgetown or other Holy Cross, University of Seattle. Where would you catalog those in terms of their relationship to the faith communities? I think on the second question, there's plenty been written clearly about greed and irrational exuberance. And there is certainly, in my estimation, a continuing need to have a compass or a barometer out there to say that this is real, it exists, and we could all go down that path very easily. When it comes, I find, to the question of money and finances, we always think that we could do more and do better with a little more. So if we had another $500, we could support 4 more charities. So do I put it into ExxonMobil and forget about the environment? Or those are real difficult conversations for folks to have. And yet, I think, and in this particular financial crisis, I think it's appropriately attributed to some of the practices that were allowed to go on in the interest of short-term profits. That there was not a long-term sustainability metric applied. So that there are numerous stories out there, and if you look at testimony on Capitol Hill, and I'm sure you'll be seeing more and more of it in court documents in the coming years, of the only metric by which some employees in some major institutions, in banks and investment banks, were evaluated was how much money did they bring in. That was the only thing that determined their bonus for the year or their salary. Wasn't the number of clients, wasn't the number of projects, wasn't how long they'd been in place. It was how much money they got out the door or in the door, close the deal, move on, here's the next one. Wasn't what happened to it after that. So there is a real, I think Michel Camdessou in his talk speaks about that, because he talks about the dictatorship of relativism, and obviously picks up a phrase from Cardinal Ratzinger before he was Pope, that there is a constant reminder for all of us that greed is very easily gets into our lives and in the way we approach things, and we can rationalize what the behaviors that it pushes us towards very quickly and very easily. So there is a need for that reminder, no question about it.